My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Oh, do I make friends? I'm just trying to make a little money. My job is not just to entertain, but to educate. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. You come into work, and you'll learn that the Chinese are targeting all the frontier AI models, the Anthropics, the OpenAIs, and you wonder if they can get their IPOs off. Maybe not, because the Chinese also have cheap memory, which we think they do, or maybe they don't. But if we can get some hands on it, it'd be great. But if American companies truly avail themselves of the Chinese tech, won't they be targeted by China's open source models? And what does that mean for the price of tokens, Jevons paradox, and national security? Did you understand any of that? Oh, I don't. I can't figure out how this will ultimately impact Intel or NVIDIA, two of my Chapel Trust core holdings. Could it delay an OpenAI IPO, impact their deal with Oracle? Will it keep propelling AMD? After a day where the Dow shed 307 points, S&P declined 0.19%, NASDAQ dipped 0.05%, after what was, by the way, a very strong opening. All this hand-wringing over AI competition from China makes me want to turn my back on tech and just find high-quality companies like Goldman Sachs and Wells Fargo, or dig my teeth into FedEx and FedEx Freight, or maybe scoop up some Honeywell Aerospace and Boeing. You know why? See, because if you own too much tech, you're going to be slaughtered. And you won't even know what hit you. Okay, not today. And we've been hit pretty hard here, as you will find out if you stick around. But I don't want to be some journo who only piles on when things are down. We might have some momentum here, but if you own these kinds of non-tech stocks that I like and they do go down, you know what you can do? You can confidently buy more of them because Goldman Sachs or FedEx are comprehensible and they're not subject to rumors or Chinese riposts. In so many ways, that's what's wrong with this market. I mean, right now, for example, if SK Hynix, the high bandwidth memory maker from Korea, or SpaceX, the Musk satellite company, or Oracle with its flagging bonds and stock really break down, then believe me, they're going to take everything with them, including many tech stocks that do not deserve to be hammered. Now, I've told you how my Chapel Trust is diversified away from tech with new money, with the exception of Intel. More on that in a second. For the club, I've been content to own industrials, not necessarily data center industrials, as well as healthcare, because we don't want to be the next SK Hynix, the stock of a tremendous semiconductor company that's been hijacked by desperate traders who really should be stick with betting on the World Cup. The bulls remember the early 2025 DeepSeek affair, where stocks were crushed because of the introduction of a Chinese AI program, but then bounced right back. Now the bulls are arguing that this new AI threat, Kimi K3, brought to you by the Chinese company Moonshot AI, is similar to the DeepSeek affair, where everything else was brought down. But if you bought tech, especially data center tech, you're going to make fortunes, just like when DeepSeek turned out to be second rate. I'm not so sure, though, we should swoop in and buy this time, because the stocks that could be rocked are stocks that, even after the decline, are still incredibly high. Like a Micron, like an SK Hynix. They're ridiculously cheap on an earnings basis, but they're high. We will examine some of the most hard-hit stocks later in the show. You can make up your mind. I'm thinking some will come down so much there is some real opportunity here, and I'm not blind to it. That said, let me tell you what we're doing. First, we are not touching the Trust's long-standing Apple position. The sharp knives are indeed out for the Apple, let's say, management from the tech intelligentsia. The intelligentsia say that Apple missed the most important story of our lives, artificial intelligence. They lambaste Siri. They regard the lost opportunity as critical to Apple's failure for the next generation. Yet, you know what? These same people are posting from their iPhone 17 Pro Max. You know what? They would rather slit their wrists than switch to Samsung. They remind me of when I sat next to Steve Ballmer at my 35th college reunion when he was still CEO of Microsoft, and he put out some sort of gizmo that made me giggle. It was a Windows Mobile. Does anyone else remember that? I doubt it. So in its core business, Apple's bulletproof, and they never spent much on the AI in the first place. I want you to think about this as you look at Apple down $7 today. Did anyone switch to Samsung during this travesty of an AI issue? Did anyone say, that's it, I am sick of it, I'm sick of the 17 Pro Max, get me a Lenovo? Perhaps the cognoscenti wishes that Apple would spend $200 billion, maybe 70% on the data center structure and power, maybe give the rest to Google TPUs, maybe buy some expensive NVIDIA GPUs. As someone who owns Apple for my charitable trust, I actually like that they let Alphabet spend those billions of dollars on AI, and then they had Alphabet pay them a nominal sum, so it was in the iPhone. The pros have a term for this Apple-Alphabet deal. You know what it's called? A great deal. Oh, I also want NVIDIA. I know people think I've been unkind to NVIDIA of late. They say I've been critical that they're not buying back more than $80 billion worth of stock, given that the shares are insanely cheap on next year's earnings estimates. Do you know this is actually more of a love tap, people? Throughout this period, there have been companies that claim that they think the world of NVIDIA, but they want to make their own chips. You know what? I say go ahead, make NVIDIA's day. But if the customer wants NVIDIA, what do you do? What do you say to them? No, you see, like, we don't have NVIDIA. You know, we've got the deli worst. I mean, they go somewhere else. NVIDIA's at the heart of the data center, practically invented the data center. It has no Chinese competitor for real. The fact is, these machines, and they are machines, by the way, packed with hardware and software, they're the envy of the world. In deference to Lisa Su, AMD comes close. But there really is nothing like NVIDIA. And that matters. Yes, and we want Intel, which reports this week. Intel is a triple play. CPUs that you need for the new AI agents, the foundries to manufacture chips, and the packaging of chips with their high margins. Something CEO Lip Bhutan knows better than anyone. Why? Because he saved Cadence, the best at packaging, and then he gave you a 50-bagger while he was at it. His foundries are going to be the best hope we have for an American semiconductor renaissance. Intel is a national treasure. I hope the stock sells off on Thursday. Please sell off. Please sell off. You know why? So we can get a bigger position. Understand, again, I think the world of AMD, but I can't own both Intel and AMD. Too much overlap. We think ARM can be terrific, but it needs foundry space. We own Broadcom. Why? Because CEO Hock Tan hates to lose. He's a competitor. Hey, by the way, though, same goes for Matt Murphy at Marvell Tech. But again, the concentration is too much for me because these stocks at the very moment mistakenly trade with the Korean stock market overnight, and then they get beaten down by the American press in the morning, which loves to praise the Chinese competition. Oh, my, the American press loves China so much. They're so smart. They're so smart. We're so stupid. We're so stupid. Clowns to the left of me at Caltech, jokers to the right of Stanford, stuck in the middle of MIT. In the end, today was a day to buy FedEx. It was a day to pick up some Honeywell Aerospace. Real down. Hey, how about buying some GE? It was down a ridiculous amount even after it got the biggest order for its 1,000 LEAP engines to power the Airbus A320neos, part of a joint venture. That wasn't enough. I was shocked that the stock wasn't up on that news. Instead, it fell nearly $8. Kind of a crazy market. But to buy more tech, only if we get a washout sell-off first, where all the margin mongers and the option ogres, they just get blown out. Both here and in Korea, where the Nasdaq, of course, truly had to make a buck bringing them over. I should add we have plenty of hyperscaler stocks for the travel charts, but we don't talk about it much unless it's the monthly meeting. When we get that speculative washout sell-off, it'll be all over tech, and the values will be self-evident to anyone who still has cash. But the bottom line, for the moment, it's time to go to other sectors. They can make you money without the volatility. You know what it makes me think of? Pharaoh's Fury. The last time I threw up at a theme park, but I missed my daughter. I mean, I didn't hit her. Bill in Indiana. Bill!
Hi, Jim.
Bill,
I'm
what's
a club
happening?
member, and I thank you for the help and advice you've been giving me over this period of time.
Thanks, buddy. Thank you.
My question is about AutoZone. I've held the stock for about 5 years while there's been a big consolidation in the auto parts industry. So it's been a very profitable trade for me, but it has now lost about 30% over from its high from the last several months ago. So I'm thinking about selling it. What's your opinion?
Bill. I
Do you
mean, look,
think
they
it
did
can
have a
recover?
problem. Bill, they had a problem. You know, like they have a lot of Chinese, they had some tariff problems. This stock sells only at 19 times earnings. They continue to buy back stock. I wish you would not sell it down here. I think that they can make a comeback, but I hear you because I did think this was going to be a big year for them, and so far I am wrong. Thanks for being a member of the club. I'm looking at the stock and thinking, oh, wow, don't sell it here. All right, for the moment, when it comes to the market, I think you have to look outside of tech to get the best opportunities, but that'll change if we get a real washout. On Mad Money tonight, I'm digging deeper into the sell-off than anything related to AI. Don't miss my rundown of where the worst spots are and where to find opportunity. That is a time to press play on a position in Netflix. And why the stock has been beaten down so much, and whether now's the time to buy. I'll find you. And this earnings season hasn't been too exciting, but there are some things to keep your eye on that I'm pointing out. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.